Good morning, everyone. Today is the 20th of August. It is a Tuesday. It's FOMC, and we've got a market that is still running to the upside. This is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and it is still buy the dip. Now, yesterday, we didn't really get a buy the dip, so let's talk a little bit about these days that we don't get the buy the dip. I don't think it's going to be today, to be honest. I suspect we will have a dip, and that dip will come into maybe 5,600 and potentially 5,565. Look at how many green days we've had. 1, 2, 3, 4, 5, 6, 7, 8 days. That's pretty close to the longest run that we've had in a lot of years. Jack Peltzer from Top Step TV gave me this statistic. He gave all of us this stat, but I cannot remember the last time it actually happened. But this is a very unusual situation. So what does this mean? Well, it means nothing other than, hey, isn't that interesting? Here's what you want to look for. Don't look for the obvious reversal. Look for the obvious place to participate. And in this case, with buy the dip, let's go down to our 30-minute, and we can see, whoa, that's fairly sideways. We've got volatility bands and prior support that says, 56.26 might give us a pretty good shot at pulling back, right? So here's what you look for. You go, okay, if it's here, and you're dying to take a short, you might take the short on the failed break here, or you might take the short at the high test here at 56.37. Whichever the case, you've got to manage your risk and don't hang on to the trade. If it breaks over the high, you can easily hit the reverse button. But in some cases, the reverse button will be bad for you, and in some cases it won't. So the key thing is measure your risk. Measure your risk so you don't spend all your time spinning your wheels. All right. So sideways formations, waiting for some things. We can see the base, 56.25, and then below that, this 5,600 area also showing up on these tighter volume formations. What a mess. Whoa, that is very ugly. All right, let's take a look at the corresponding SPY. Same sort of thing, obviously, right? Pullbacks, 558. Yep, 558 is that zone, and then it went, all the way up to 559.50 into the close. So you got to watch those. Got to watch those pieces. That really did expand quite dramatically. Let's look at the daily range. Take a look at this. 565.50 is just a stone's throw away. My suspicion was that that was the area that we would just sort of grind to a halt at that 560 area. Feels like it's happening, but not so fast. Pullbacks are still buy zones. And so that's really what we'll be looking for in the grand scheme of why do I not like that color? I just don't. These colors make me a little bit crazy. All right. Anyway, this is what we're looking at. Pullbacks are buy zones 560 to 565 on the upside, 553 to 547 on the downside. But the market really has not been giving us any room other than to buy the dip in anything other than a quick snap forward. All right, breaking the prior highs of the prior day, yesterday, the Qs have really continued sharply to the upside. 20,046 might be that area that we look at for a pullback zone, for a target zone. And the pullback area, this thin volume profile around 19,260, still troubling to me. But yeah, if we break the pre-market high, that would be Asia's high, or pre-market or current London high, it is going to be bullish, you know, for another 150, 200 points in the Qs, in the NQ for sure. Let's take a look at the Qs. Doing the same thing. This moved all the way to 480. I mean, wow, just gigantic motion. Dip buying is clearly listen, I changed the volume price trend. I moved it to an 8 weighted, volume weighted moving average. And so it gives us the turn a fair bit earlier than in times past. Really, the formation you're looking at is the orange line, right? When that starts changing shape and flattening out, then you know you've got a shift. Notice here, there's no change. There's just a spike in the motion going up into resistance right now. Just pure bullish price action, and the ATR coming in just a little bit more. Upside 486, downside 474 to 468. We've had 1, 2, no, that doesn't count. So the Qs have really had sort of spotty days where we've had generally higher lows and higher highs for 1, 2, 3, 4, 5, 6, 7, 8 days. But we can see clearly the day before yesterday, that trading day Friday, this did close negative. Let's finally take a look at the YM. Short video today. YM coming up on, wow, let's take a look at this trend line here. Probably going to break it, right? Sitting right there in this edge. How many days have we had upside? Not too many. 1, 2, 3, 4, 5 days to the upside. This is a broadening wedge. It's a very ugly formation. Lower lows and lower highs, but not with any kind of trend per se. So this widening action gives us really choppy formations that are fairly likely, but it is still by the dip. Where is that dip? 30 minutes, probably not a good one to tell us. 4 hour across the board gives us old resistance, new support, higher high. So old resistance making new support. Let me borrow this line. Looks like 40,909, which is about, 90 points or so from where we sit in the YM. Upward trajectories really, really working here. Take a look at this volume, price, and trend. It is beginning to flatten out, and the ATR is clearly on the decline. So this is going to start tightening up quite a bit for the next explosion into whatever direction we're going to have. All right. Oil. Oh, I did say that was my last one. But we'll take a look at oil. Oil coming in. Ooh, value area low overnight. 72.50. This 73.30 to 73.60 area, I really like as frontline support. Pullbacks should be buy zones. API this afternoon, thin volume pocket, gap up into 74.76, moving average. Volume by trend says this is literally nothing but sideways rotation of product, moving back and forth. Okay, so nothing really telling us about accumulation there. Gold, however, totally different story. Oh, for heaven's sakes. Gold is definitely on the rise and well into these upper targets, right? My thought is we've got ourselves a pretty big upside move on the horizon that is continuing. We could get ourselves up to 25.58 and easily 2600. All right, folks, that's it. Take care, and I'll see you on the platforms. Don't forget, I'm on the Benzinga Options Show. We'll be looking at the Palo Alto Network's double butterfly that we put on into earnings and see how that takes us. All right, everyone, stay safe, watch your risk, and I'll see you soon.